Hi everybody, welcome to another update on the stock screener. Today we are going to talk about SOMA Gold. As you can see, the stock price is holding on to its highs and is probably going to go much higher. Today I wanted to talk about the size of gold miners. So some people are afraid to buy these small miners. As you can see, SOMA Gold is only 58 million market cap. Yeah, I get that it's more risky, but when you compare these small miners with the big miners, then there is an arbitrage in valuation because these big miners are probably overvalued, while these small miners are still undervalued. And as they grow bigger, then their valuation will rise. And to show you this, let's compare SOMA Gold with the biggest gold miners in the world. So here you have a chart with all the biggest gold miners. Biggest is Newmont with 1 million ounces per quarter. So that's 5 million per year. That's the biggest one. Then we have Barrick, Agnico, Newcrest, which is bought out. Then Kinross, Endeavour Mining. By the way, this is not 1.7. This is around 8 billion right now. So you can see that they produce much more gold than SOMA Gold. SOMA Gold is only producing 47,000 per year. But now let's look at the valuations. So what I did is I created an EBITDA valuation 5 times multiple. So I do the production times the current gold price minus the cost. This is the cost. And then I do a 5 multiple on that. So this is actually my valuation of the company, 5 times EBITDA. And you can see that it's overvalued. So market cap is 27 billion and my valuation is only 15 billion. So that's 70% overvalued. So I did that for all the gold mines and most of them are overvalued. SSR Mining, very overvalued. Victoria Gold, overvalued. Orla Mining, also very overvalued. Now the undervalued ones are Kinross, yeah, but they have done very poorly. Also have a lot of capex probably. Lundin, I think this is a very good one, but they don't have a lot of growth. So there's not a lot of upside on this one, but it's undervalued. Torex Gold has a problem of resources. They don't have that many resources. Probably 3 years, 2 years of mine life. So they need, I think their production is going to go down in time. So that's the problem here. Eldorado, I think it's because of Africa. New Gold, probably the high costs, 1,500. You need to find a miner that is low cost with high margins. Dundee, that's a good one. And of course, SOMA Gold, which is the most undervalued of all of them, 80% undervalued based on EBITDA 5 times multiple. Now, another thing to look at is the costs. So currently the average weighted cost is 1,260. That's pretty high. So gold will probably stay around minimum 1,600, 700 because it cannot drop to the average cost, because then all these mines will shut down. Then they will not be making any money, so they will cut production. So to incentivize gold production, the gold price should be at least 1,700. And now it's 2,000, so I think 2,000 is a fair price. I don't think that gold will be going much lower than 2,000 based on this cost. And look at the largest gold mines, their costs are even higher at 1,400. So I think it's looking very good for gold based on these cost pressures on these large miners. Now, look at the cost of SOMA gold. It's only 950 AISC, which is below the average AISC. So that's very good. Low cost, undervalued based on the production. So yeah, there is an advantage in buying small gold miners compared to the big ones. The big ones are all overvalued. And if you can find a small one that is undervalued, then you're going to make a lot of money. And this AISC is very real. It's below 1,000, despite what some people say on Twitter. Soma Gold is a low-cost producer. And that's why we invest in these companies, because they are going to go up much faster than these big ones here. That was all I wanted to say, and I'll see you in the next video.